So let's have a look at what had been happening in the Sydney property market during July and what might happen in August and going through to later this year. So basically there've been a few positive developments over the past couple of months. The first major development is the RBA had reduced rates by 50 basis points. Banks had fed on a large portion of this to borrowers or prospective borrowers. This reduces the amount that people have to pay when repaying their debt, so it increases the access to debt. The second positive development is that APRA had reduced the serviceability requirements against which people need to be assessed by banks. Previously, banks had to assess whether people could repay the debt at a rate of 7%. Going forward, they just need to assess people on whether they can repay the debt at the current interest rate plus 250 basis points. Banks might feed in a buffer to this, but nevertheless it reduces the hurdle that people need to meet. The third positive development is the continued feed-through effect from the federal election. The coalition won the election. They were generally seen as more positive to the market because they wanted to maintain negative gearing policies and they wanted to maintain the capital gains tax discount. This was seen as positive news for the market. This is still relevant because it takes a little while for that positive news to feed through into the market. This is because it needs to feed through into vendors who would then need to decide to list their property on the market and then go to auction. So there's quite a few weeks that are involved in getting the property to market and going to auction. So those are some positive factors. Now clearly other global factors can influence the market, but the most relevant ones are those local factors that are going to really drive the decision to either list property on the market or to purchase that property. Some negative news, of course, is sluggish wage growth and continued lack of consumer confidence, which to some extent reflects that wage growth. That sluggish wage growth obviously puts a damper on what people are willing to and can go out and borrow. So it obviously is going to reduce any positive upturn in the market to some extent. So those are the news-related factors that could drive prices. Let's have a look at what's been happening. So basically what's been happening over the past month is there's been a general flatline in the property market. So for example, in general terms, the number of properties coming to auction on the Saturday has been just shy of 300. The exact number has fluctuated week to week, but it's been just under 300 properties. That isn't many properties, it's relatively small, particularly when compared to say last year or compared to the height of the market, which would be generally in spring. So it's been a relatively low amount of stock. Now to some extent this reflects a couple of things. Firstly, this is just reflecting the auction-related stock on Saturdays. Secondly, some properties will sell before market. And thirdly, some properties will be withdrawn from auction if they can't get an interested party or enough interested parties for it to be worth taking the property at auction. So that's a few things to bear in mind, a relatively small amount of stock. Now, to some extent, that small amount of stock is not a good signal. It's not a good signal because oftentimes, when there's a small amount of stock, it reflects, like I indicated, vendors taking an offer before auction or withdrawing their property from auction. Neither is necessarily a good signal. The first one indicates the vendor is not confident about the price that they might get at auction, so they leap on an offer before they go to auction. The second one indicates the vendor didn't have enough interested parties, so therefore it is a negative signal about the market and the amount of interest there is about these properties. So neither is a great signal. Now we can then look at clearance rates to see how this is manifested. So generally when there's less supply in the market, you would expect an uptick in clearance rates because if there's less supply and you've got the same number of buyers, you would expect the clearance rates to increase because of the fewer number of properties available for purchase. The clearance rates have been quite healthy. The clearance rates have been about 70% or so. It's fluctuated week to week. So sometimes it's been more toward the mid-70s, sometimes more toward the low 70s. So it's fluctuated a bit, but it's been around that 70 to 75% level. Now what that tells us is there's interest in the market, there's interest given the current levels of stock, but given that there's not much stock in the market, you would expect the clearance rates to be relatively high compared to normal. So it's difficult to read too much into those positive clearance rates. So basically we've got not much stock, the clearance rates are going okay, but we need to bear in mind there's not much stock. Now in terms of price movements, it's difficult to get data on this. The reason I say that is data on property prices is very lumpy and very heterogeneous. So basically each property is different from another property. So it's difficult to really draw clear trends from property price movements. The property prices appear to have stagnated, maybe moved up a little bit, but it hasn't been a major change. So basically there hasn't been a huge upshift in prices as yet. Nevertheless, there could continue to be a positive trend. The prices don't tend to have plummeted, but there hasn't been a huge upshift. So basically, what does this tell us for what might happen in August going forward? So we've had our first week of August so far. Clearance rate has been just above 70%. We had just under 300 properties come to auction on Saturday. This is generally what we'd expect throughout August until spring at least. We'd probably expect a stabilization of clearance rates, a stabilization of the number of properties. The reason for that is we've had some positive news, but there isn't really another positive catalyst that we'd expect over the next month. So it's not clear why we'd expect either more property or an increase in clearance rates. There appears to be an appetite to buy, but not an appetite to go out and buy for fear of missing out. So basically there's a healthy interest, but people aren't leaping over themselves to buy property. The bigger issue that's going to arise is what happens in spring. So in spring, traditionally, a lot of property comes to the market. Now that's not to say that will automatically happen this year, but in general terms, a lot of property does. Part of the reason for this is people want to be able to sell their property before we get through to the summer holiday period when there's less interest in the market. So people will bring their property to market in spring to try to get it done before December. So basically, what we would get in spring is a lot more property coming to the market, so a lot more supply. What we then expect is if demand for property remains the same, we'll probably see a reduction in clearance rates because now buyers have more to choose from, so they can be more picky, so the interest that will go to each individual property will decrease, and or each vendor might have to lower the prices that they're seeking for their properties. So for this reason, spring might see a slight drop-off in the amount of interest in the market that would be manifested in clearance rates. So basically, to summarize, there's been positive news in the market. This is translated into some positive trends in terms of clearance rates being quite healthy. But there's not much stock in the market, and we need to bear this in mind when evaluating it, and the lack of stock itself can be a bit of a negative signal, and the lack of properties coming to auction can be a bit of a negative signal. Nevertheless, one would expect this general positive trend to continue throughout the remainder of winter. Come spring, however, we need to reassess what might happen when the glut of stock comes onto the market and how this is going to affect the prices that properties receive and clearance rates, as buyers would now have more options when they go out to purchase property. So that's basically what's happened in the market and what one would expect during August and what one might see during spring coming up. So I hope the video has been informative to you. I hope you've gained something from the video. If you have, it would be great if you click the like and subscribe buttons, and I hope to see you next time. Bye.